Excited you could be here because today we're talking about making money on real estate without doing all of the work. Look, you already know there's a lot of returns you can make on real estate, but the reality is there's even more you have to learn to be able to be successful in this space. But what if you don't have to do that? What if you don't have to do the work? What if you don't have to learn all the ins and outs and choose the right real estate style to get into and everything that's involved with succeeding, but you can still get really good returns? Well, it's absolutely possible, and that's exactly what we're going to dive into and decode for you today. And to have this conversation is Sachin Jhangiani. Now, Sach is the co-founder and CMO at Elevate Money, where he provides alternative investment access to millennials via its tech-driven platform by offering fractionalized interest in commercial real estate portfolios to non-millionaires via a seamless and user-friendly digital interface. Now, Sach has a successful 15-year career at Credit Suisse and made it to the top of the ranks as a managing director. Now, in 2016, he left his job and moved to the West to recalibrate. Over the next several years, he fell in love with digital marketing communications and found the drive to share his knowledge from Wall Street and help make the world a more level playing field when it comes to building wealth and taking ownership of one's finances. Sach, thanks for joining us today.
Thank you so much, Ty. I really appreciate it. And that was an awesome intro. Thank
Yeah,
you.
man, I'm really excited you could be here. So obviously we've all heard about making money in real estate. We all over here in the US, where you're in Miami, we all watch the shows about making money on real estate. But it seems like a lot of work. I mean, when you're actually on the ground trying to make money with commercial real estate, is it really as much work to try to take this on your own as what it looks like?
I can tell you that it's more work than I can do or that I personally have the expertise to handle. And so that's sort of where, Elevate Money came into play. In essence, if you want to be an investor in real estate, it should be a full-time career. And two, you need a certain amount of capital or access to capital. And it should just be your passion, your drive, and it's the thing you want to do. However, most people are not going to quit their jobs, and switch careers into real estate and invest all of their dollars and take all of that risk and take out loans and mortgages and, you know, all the courses and all the knowledge you have to gain. They're not going to do that. But yet they're earning money and the money's sitting idle in the bank, really not earning any interest. And real estate provides a really good passive return, passive income. So how do you do that? How do you take advantage of the passive income opportunities of real estate, have another multiple stream of income without having to put in the effort, the energy to do that? And so that's where Elevate Money comes into play. Millionaires have been doing this for a really long time. I mean, most of the wealth in the United States has been built through real estate, but the average investor really was left out. Unless you had tens of thousands of dollars or hundreds of thousands of dollars, you really weren't let into the funds, the clubs that said, hey, we're going to buy this strip mall, or we're going to buy this, a multifamily property or whatever it is, and we're going to earn high returns. We're going to take advantage of the benefits of the depreciation. We're going to take advantage of the compound interest and all of those things that real estate offers. And as we've seen today in the volatile markets that we've been hit with, if you don't have a diversified portfolio and all your eggs are in one basket, chasing speculation, whether it's stocks or crypto or whatever it is, you're going to be part of that volatility. So if you buy low and sell high, great. Most people don't do that. So real estate's a nice way to addition to to build a balanced portfolio and, think longer term and kind of expand your time horizon so you can, handle the volatility, and the income that you earn from real estate helps sort of battle against that.
What you guys do is specialize in, I guess, what's called a real estate investment trust. Or an REIT. So what is an REIT? How's that work?
Yeah. So a REIT, I mean, in essence, it was created to crowdfund real estate. Real estate is expensive. And so most people, can buy a house maybe, but they don't have the ability to go buy multiple buildings or multiple commercial properties. So REITs were created to help the economy and help investment in commercial real estate through basically a crowdfunding vehicle. This was done before the ability for anybody to crowdfund. So you had to be initially a millionaire accredited investor to access these REITs that were private. There's also REITs, the same structure in the public markets, The only difference there is that they also have the same volatility as stocks. So, you think you're investing in real estate, but because somebody can buy and sell it every second, there's a lot of emotion behind it. And when the markets are down, the real estate might not be down, but you might be down a lot because of the emotional attachment to the market move. So the private real estate funds, the REITs, allow people to invest really more purely in real estate without the volatility. And in essence, the goal is to pool in the capital, go buy the asset, let the manager do the work, find the asset, do the due diligence, collect the rent, maintain the property, pay all the taxes, and then, file it, do all the filings, and then basically pass over uh, the rest of the passive income, net of fees, to the investor. Some people do that on a quarterly basis. Some REITs do it on an annual basis. We do it on a monthly basis because we get rent on a month per month, you should get your cash per month. And so that's sort of the thinking behind it.
So the idea of a REIT is that somebody doesn't have a lot of experience or any experience in commercial real estate. They can now come in, they invest into the REIT, and they put their money in, and then basically that money goes to work with a team of people that know how to buy the property, manage the property, do it the way where it actually cash flows and makes profits. And then that person in your world, which I've never heard monthly before, but they actually get paid out monthly a return on that investment they originally put in without having to do all the work and manage the property and buy the property and the risk of going out of pocket and getting their own financing for the property without all of that other stuff that, let's be honest, typically prevents them from even being able to get in space to begin.
Yeah, that and what if you buy the wrong property? So another benefit of a REIT structure is that as the REIT grows, the portfolio grows, as we get in more capital, when we buy more properties, each investor basically owns a pro rata share of the entire portfolio. So if there's 2 properties, you diversified. If there's 10 properties, you're more diversified. By the time you get to 50, you're even more diversified. So without doing anything over time, you're getting diversification in your real estate portfolio. Individually, that's very, very difficult to do if you're only going to invest a few $1,000s, right? So that's another really key benefit of investing in a portfolio. So yeah, again, many, many benefits. Now, as far as passive income, so for example, at Elevate Money, it takes about 4 minutes to invest in our portfolio, right? That's it. Again, you don't even have to do the due diligence on each property, even though on the website we give you all the details of why we purchased it, where it is, the name of the property, the rent collected, everything we share, open book. However, you don't have to dive into it if you don't want to. In 4 minutes, you can invest in the portfolio. And if you invest in the portfolio since we launched, you would have earned a monthly dividend with a 6.5% annualized yield, and for now 18 consecutive months. So without thinking about it, you're getting your dividend payment every month. Now, 90% of our investors choose to reinvest those dividends back in the fund. So they compound that return. So really at the end of a year, if they had compounded, they probably would have earned 7% cash flow on their cash.
So I'm able to invest instead of one property where anything could go wrong and lose all my money. Now with the REIT, I'm actually investing and diversifying across multiple different properties. So even if one loses money, one makes money, it kind of offsets. And right now what you're saying is like the portfolio is seeing a 6.5% return, which is way better than I'm going to get in most other places. And I don't have to do any of the work. I literally just put the money into the REIT and then it's diversify the properties. Your team's doing all the work. And then every month I'm getting my return and choose to either cash out that return or just reinvest it where it just compounds more from there.
100% true. And in essence, like even myself, I'm invested in our product because I don't have the expertise to go do that. And I also am not investing, hundreds of thousands or $1 million in a single property. David Perdue, who's our CIO, he's bought $500 million of real estate in this sector. So he's talking to brokers every single day. He probably looks at 200 properties a day. He probably does a deep dive on 50 of them a month and makes offers on 3 or 4 a month. And, that's how we find our property. So, I mean, there's no way I'm going to do that. I would rather trust someone like that who's in it and has the relationships and has the know-how and has seen everything over the course of 20 years to run that and has a team that's going out and visiting the properties and so on and so forth. So you're not paying the flight and I mean it's expensive to do all of that stuff if you're an individual. So doing it in a group in a shared way is much better. for yourself. Now, if I was investing 50 million or $100 million, I'd probably want to invest real estate myself because I'll get better margins by doing all that work. But up until that point, it makes no sense to try to do that from my perspective.
What is your tip? And there might not be a typical investor. So, what's a range of investments that you typically see from people coming in and investing in the REIT?
Yeah, I mean, we have early on we had a lot of people in the 100 to 250 range who are testing the platform, making sure it works and we're legit, we're paying dividends and so on and so forth. But we have, I mean, the largest check size we've gotten is $250,000. So it's a very, very wide range. Generally, it's a couple of grand. It seems to be sort of a nice average, but yeah, the minimum for the commercial real estate fund, which is an income focused fund that pays a monthly dividend, is $100, but there's no maximum amount. We're also launching our first residential fund by the summer of this year, and that's going to be a more growth focused fund with a longer lockout period. It'll have a 1 year lockout period, and it won't pay a monthly dividend. It'll be targeting longer term, higher yielding growth, and that's going to be based on our new partnership with Boxable. So really what's happening in this country is housing affordability is in a crisis. People are spending over 40 something percent of their monthly income for housing. That number really needs to be 30%. Anything above 30% is in danger territory. So we're seeing that home prices are only going higher, labor is more expensive, inflation, land, all these things are going against us. And the average person's having a hard time finding a decent home for themselves. So this is a real critical problem. Boxable is at the forefront of solving this, through a foldable manufactured house. So now manufactured housing's been around forever, but it's only captured, less than 10% of the market because you can't ship these houses. They're massive houses. There's a lot of expense and risk in shipping them. But a Boxable is a foldable house that can be shipped, on a regular truck, flatbed, and reduces the cost. It's sustainable, it's cheap, and over time they're creating where they can stack on top of each other, and you can build a bigger house or a multifamily unit or office buildings or whatever it is from these Boxable units. So we're excited about that partnership where Elevate Money has the right to purchase 10% of their production, and that's going to go into this future of housing fund that we're launching. And we're going to really go after this sort of new housing technology area of whether it's 3D printing houses, Boxables, manufactured housing, land deals with governments. I mean, there's a lot of opportunity in the space to solve this, but also build cheaper, sustainable houses.
I love that. A couple things I want to unpack. To get back to clarity on money to invest, are you saying people can get involved with hundreds of dollars or hundreds of thousands of dollars?
So the minimum investment for the income focused fund, which is based on the commercial real estate that's been paying 6.5% annualized yield, that's $100 minimum to invest in that fund. So it's open to anyone. That's how flat we've made the playing field.
Makes a lot more sense. And so outside of, there's a lot of benefits I'm seeing here. First of all, REITs aren't foreign to me. I acknowledge. I've never heard of any company that lets people in at such a low minimum, right? Most of the time, as you know and I know, they usually want 50 grand, 100 grand. It's out of reach for most typical investors at a normal level, at an average level. The other thing that I see is that, besides that, it also sounds like you're paying monthly, and I've never seen that before either. So there's some clear benefits that separates your REIT from others. But what are some other notable differences between what you guys are doing in your REIT and what's commonly out there in the marketplace?
Yeah, for sure. So I mean, you hit the two major points. Now there are other, crowdfunding platforms that do even $10 minimum real estate or $100 minimum. The difference is, I think one of the things is our expertise and our strategy. So a lot of times it's not, a bunch of young kids finding homes in their neighborhood or fixing flips or kind of, trying to do something short and quick. This is a long, sustainable strategy. There's, I believe the number is 700 million of, single tenant net lease properties that exchange hands a year. That's the sector we're in. So to explain what a single tenant net lease property is, it's basically a standalone building, rented to a business. So think of a gas station, a car wash, a dollar store, a Taco Bell, a Dunkin' Donuts. These are individual businesses that need that real estate to run their operation. They've probably been there 10, 20, 30, 40, 50 years, and will be there a very, very long time. So what happens is these when we buy these properties and they're leased to these operators, we can really do a deep dive into the operator, understand their financial history, the business well-being, the operations, and many times they're AAA, triple B. Sorry, I shouldn't say that. They're corporate credit. So Family Dollar is owned by Dollar Store. We have one of those in the portfolio. That's a triple B credit. So we feel very comfortable with that we're going to collect rent, and the risk of not collecting rent is much lower than if you're buying a single family house, renting it to one family for a year. They lose their job, you might be out of a tenant for 3 months. That's going to drastically affect your return. But here we're signing a 10, 20, 50, year lease. The average term on the portfolio should be north of 10 years with annual rent increases in many cases. So it's a very well structured real estate product. You're not going to get the 15, 20% yields like we're targeting in the Future of Housing Fund, because it's going to take more risk and have longer term sort of goals. This is a cash flow fund that is as conservative as we believe you can get in the real estate sector. Taco Bell has to have that land, that real estate to sell tacos. So they have to pay their rent. The gas station has to be in that real estate, that land, in that gas station to pump gas and sell it. So really almost the last thing that these businesses would do is not pay their rent if they were in financial, stress. And again, many of these businesses that we invest, the real estate that we buy, they service our needs every single day as Americans. So even in recessions, Taco Bell existed and earned money, and gas stations pumped gas. So I think that's really one of the differentiates in what we're doing. We have a very focused strategy, and I think we're the only crowdfunding platform that lets the average investor invest in a portfolio of these type of properties that are rented to businesses that serve our needs every single day.
So it sounds like you're diversifying into multiple funds, because Boxables, you said, is residential, and they may move to commercial, right? But your fund is commercial now. So are you launching in a second fund? That's what the Future Housing is, the second fund that deals with now residential. And is it dealing with all types of residential property or just the Boxable type properties?
Yeah, it's a second. It'll be a completely second fund. So when that's live, you'll be able to go on the platform and choose, do I want the income fund? Do I want which is in commercial real estate? Do I want the growth fund, which is in residential? Do I want a blended? And we'll just do that for you, and you can split it 50-50. So, we'll kind of give the investors options. The Future of Housing Fund, which is the growth fund that's going to be tied to the Boxable partnership, will obviously focus a lot on Boxable since they're going to be a major partner of ours, but it can do a lot of different things. It is more open-ended. So it can see opportunities, in the housing space. But when we say future housing, that's what we're talking about. We're looking for ways that are going to improve what's happening in housing, newer technologies like a Boxable, again, partnerships with local governments, really to solve an issue and drive a solid return for our investors. So sustainability, all of these things that are kind of coming online is going to be the focus of that fund. The initial idea is we will build communities of Boxables. So instead of a manufactured housing community that has a lot of stigma, negative stigma to it, these Boxable communities will be nice. They're smaller homes, but that doesn't mean that people can't live well. So even for let's say $100,000 with the land, you should still be able to really enjoy your quality of life and your living and have the amenities and all of those things. So that's sort of our initial vision. But I think about it like Airbnb. When Airbnb started, we knew it was a great idea. We didn't know it was going to create so many other businesses like, pricing apps and management companies and investment funds and all of these things. I think what Boxable is doing and what we need in housing is going to create other economies and other businesses outside of what we're seeing today. So this fund is going to be at the forefront of solving that and really seeking that out. So that's that. And give you another example of what the fund can do is you might want to buy a boxable, but you may not want to actually spend the money on it. So the fund will be able to, provide financing for a boxable or something like a boxable. So there's many things the fund can do, which I think will be really great for investors from a return basis, but it's also adding a lot of value to the economy and to the quality of life of American people. So it's sort of a win-win versus just going after the money.
What is the edge that you have in investing into a REIT versus like other alternative investments, the stock market, other types of real estate, et cetera?
Yeah, I mean, versus the stock market, obviously, when you invest in a REIT, it's real estate focused, so it's a hard asset. You know, things aren't going to be as volatile on a hard asset. You have some protection there against all, market moves. The second thing is many REITs, obviously the commercial one that we have, will pay an income. So income is nice because it can't be taken back. So if the stock price goes from 50 to 100 and you feel like you made a lot of money, but you didn't sell it and it goes right back down to 50, well, you didn't make any money. But in a REIT, if we pay you 6.5%, every year, and maybe with the tax incentive and a couple of other, maybe price appreciation, maybe that's really a 10%, but if we're paying you 6.5% on your cash, you know, in a year, we can't take that money back. So even if it were to go down 5%, you're still up 1.5%. And that's, I think, one of the real benefits of earning income on your investment is that you're creating the buffer for the volatility of a price move. Now, obviously, in a perfect scenario, you get the income and it goes up. And, I think we're going to enter a market where buying real estate is going to get very attractive in the next couple of years. So we're excited about that as we, really launch and grow our portfolios. But those are some of the benefits. And then again, diversification, like I mentioned, instead of buying a single asset, you're adding more and more assets as this REIT is growing, which is really in your benefit from a investor's perspective.
You mentioned it's as simple as 4 minutes to invest in your REIT, for example. So, what are the steps involved to be able to start investing?
Yeah, so you just go to elevate.money. It's not .com, it's just elevate.money. You can go through the site. When you're ready, you click sign up and really just ask you a few questions. Obviously your personal information. You got to connect your bank. You choose how much you want to invest. Pardon me. We have a really cool feature called auto invest. So what happens is because we've created this platform for the average person and they're not coming in with 20, 50, $100,000 initially. I mean, some people are, not everyone. A lot of our investors, about a third of them, choose to elect for auto invest. And what that is basically sort of a subscription that, hey, every month, take out 50, take out 100, take out 200, take out $500 and invest in the portfolio. So while I can't put $20,000 today, maybe I could start with $1,000 and I can add 500 every month. And then by the end of the year, by the end of 3 years, my real estate allocation and portfolio is growing without really like a big hit initially, to my savings account. So that's a huge feature. You can turn that on. And then we've got to ask, a few regulatory questions, just confirm, identity, who you are, and that's it. And then you sign the docs online, and it goes into basically a process where the broker dealer does the due diligence while we're getting the money pulled out from your bank. So that's a 5 to 7 day process. And then once everything's approved and we have the money from your bank, that's it. You're in, and then the next month you got your first dividend.
Well, anything that before somebody takes the first step, they should really think through or consider before kind of getting started with your REIT?
Yeah, that's a great question. Whether you're investing $100, $1,000, 10,000, 100,000, or a million, real estate is a long-term investment. Building wealth isn't a overnight thing. Gambling, taking speculative risk, buying an option or buying a crypto and hoping it goes up or down a lot tomorrow and flipping it, that's a different game. This is for people who are trying to grow their money long term. And so if whatever amount you're investing, if that amount you think you need back in 3 months or 6 months or 24 days, this is not for you. This is something you should really think about for, minimum, honestly, 3 years. The power of real estate and power of passive income is compounding those returns. So you want to collect that rent every month, that dividend every month, and reinvest it, and then get all of that back the next month, and then reinvest all of that, and then over time you'll actually see your portfolio grow. We have a really cool tool called the dividend calculator that's set up the way our investment is set up on the website, and you can really see that the difference between 3, 5, 30, and even 50 years is massive. We actually have an example where my co-founder, Harold Hofer, his mom had purchased a house in Santa Monica for $32,000 50 years ago. She just sold the house for $3.2 million, 100x return. So we were like, wow. But now somebody would say to us, well, I could never buy a house that cheap in Santa Monica again, and I could never afford $3 million. Absolutely. So we said is, okay, well, what was that compounded monthly return for her to achieve 100x over 50 years? And the answer was shocking. It was only 9.25%. So we're paying a 6.5% dividend currently. Our target yield is 8 to 10% between price appreciation and and the tax incentives. So ideally, you're in that range. So if you were to invest and things would be stable for 50 years, you could, in theory, turn $32,000 into something like that if all goes well. Obviously, I can't make any predictions or guarantees on the actual returns, but based on the math, 9.25% is not the most outrageous thing to earn on a yearly basis. That's the power of long-term investing and compounding. But if you take it out in 2 or 3 years, you might get 15, something percent, and that's it. So do you want the 100x, and can you put this money away for a long time, or are you trying to flip it into something? And that's something to think about.
I'll tell you, great stuff, and I love what you're doing. I think it's a game changer for a lot of people that want to get into real estate and don't have the knowledge or experience or money or time to be able to do so. So, everybody watching and listening, where can they go to be able to learn more?
Simple. Elevate.money. We made it simple. So the company's called Elevate Money, and the website is elevate.money.
Perfect. Thank you again so much for coming on. I really appreciate your time today.
Likewise, Ty, really enjoyed it. Appreciate it.
All right. So listen, this is something that's very unique. I've done, I don't know, 700 plus episodes in this podcast, and I've never had somebody come on that talks about this type of opportunity where you're able to get paid back and earn monthly like this. You're able to get in with such a small entry level, and even with the ability to automate your investment as you continue to grow in success and income and revenue. You continue to have more and more money to be able to invest by smaller increments, which really compounds over time, right? This is how the richest of the rich get as rich as they are. So what you want to do is go to elevate.money. That's elevate.money. And when you go there, everything you need to know. There's an about section. There's an FAQ section. So I know you used to probably have outstanding questions that weren't answered here. There's a great blog with all kinds of information there. You can learn about how it works. You can learn more about their actual team, the properties, everything that you'd want to know to do proper due diligence before thinking about getting started. And think about this. You can get started with $100. I'm not saying you should, right? I mean, a lot of people probably start with thousands or tens of thousands maybe, but a lot of average people get started with $100, $200, $300, $500. And then as they're starting to see it work and get more comfortable, invest more and more and more. So it's easy, 4 minutes to get going. It's very affordable to be able to get going, and everything you need to be able to make the right decision is right at elevate.money. So make sure you check out elevate.money and get started today so you can start that compounding of your money and be able to have huge returns in the years to come. Thanks for tuning in.